Asian markets were softer at the close following the weaker than expected U.S. jobs report released on Friday. Hong Kong's Hang Seng Index led the losses in the region, slumping by 1.8%. China's inflation rate grew 0.6% year-on-year, lower than the economist's forecast of 0.7%. China's Shanghai Index fell by 0.8%, while Japan's Nikkei average declined by 0.7%. Over in the United States, markets registered declines at the week's close. This on concerns around a weakening labor market and a continued sell-off of tech stocks. There was a broad-based sell-off in major tech firms like Amazon, Meta and Nvidia, among others, falling by a range of between 3 and 4% on the day. Market jitters were stirred further following the release of the August jobs report, which showed that 142,000 new jobs were created, lower than the 161,000 jobs forecast. The Dow Jones was down 1.01%. The S&P 500 declined by 1.73%, while the tech-heavy Nasdaq fell by a whopping 2.55%. The JSE is mainly higher today, with the all-share index up 0.5% at 81,756 points. The rand is trading at 17.92 against the US dollar, 23.44 vis-a-vis the British pound, and 19.78 against the euro. Gold is trading at $2,495 an ounce, platinum at $939 an ounce, and Brent crude oil is trading at $71.43 a barrel. James Turp, portfolio manager at Sanlam Investments, joins me now. A very good afternoon to you, James. So US markets registered those falls that I've outlined. The drivers behind this, particularly being the lower than expected jobs number, should, I would assume, augur well for a bigger cut in interest rates. What do you think?
Thanks for having me, Nompu. That's been the story that ended off last week, wasn't it? The jobs numbers, and there was a little bit mixed data coming out of it, but the market has interpreted it as consistent, of course, with an interest rate cut, but now it's all down to the size of those cuts. Do they front load them or not? Because the data had to complete the story that we've been seeing, where inflation has been moving lower and the economy slowing down, the soft landing that we keep hearing about. And so these numbers didn't necessarily change the script. So we've also heard members of the Federal Reserve Bank's Open Market Committee talking about the time being right for interest rate cuts at this coming meeting in just over a week's time. And so we're looking here at Sanlam Investments at just how much is discounted for the year, and it's over 100 basis points of cuts over 3 meetings, which means there's a chance, of course, of 50 basis points cuts, which would be front loading, and it would be a larger move lower, and that's what everyone's trying to get their heads around at the moment. And perhaps the last piece of the puzzle will be Wednesday's US CPI data.
Yeah. So I suppose it's fortunate that our Reserve Bank will only be making its call on interest rates a week after the Fed does. And the expectation has been by the local market that we're going to get a rate cut. What do you think?
Definitely is the case. We shouldn't always say definitely, but it really does feel at this point that a 25 basis point cut is the least the Reserve Bank will do, bearing in mind that 2 members of the committee voted for a cut at the last meeting back in July. So, yep, 25 points is almost a foregone conclusion, but the luxury they've got, of course, as you say, is that the Fed go the night before. They'll tell you they don't necessarily pay attention to that, but of course they will. And if the Fed go 50, it would open the door here or make it easier to justify 50. But in the context of South African inflation, and we run at higher levels of relative inflation to the US, and that is something that our central bank and central bank governor has been flagging, that our inflation target at 4.5% is higher than our peers. So we keep hearing this commentary of looking for a lower inflation target. If we can get inflation lower consistently here in South Africa, that is much better for the lower income households. So in the back of your mind, you would think 25 basis points is probably as good as it gets. But that wild card is the Fed moving 50 the night before.
So you talk about South Africa's inflation being relatively higher. When we look at China's inflation, that came out at 0.6% on a year-on-year basis. That seems very paltry. And sometimes when the inflation number comes out lowly, that does signal negativity in terms of how that economy is doing. How do you read how China is doing, given that its manufacturing data of late and other indexes don't show that it's doing too well?
That's it. Of course, in South Africa, we're really sensitive to the Chinese economy because of their demand for commodities that we produce. And that's the talk of the town at the moment, is the state and health of the Chinese economy, because, as you say, we're seeing those figures coming out. We're seeing a weak property market, which is a real concern globally for the state of things in China. Services sector also missing numbers there as well. So it's an economy that seems to be struggling. There's concerns in some publications around the quality of the data as well that's being released. That's arguable, but certainly the commodity prices are reflecting that there's weak demand coming out of the Chinese economy, and that's a global concern. So, yeah, where you would use inflation also as a measure sometimes of demand in the economy. There's two types of inflation. So with a lack of demand coming out of that economy, they would actually prefer higher inflation there. We're on the other side of the coin because we import a lot of our inflation. So it's set by external pricing, whereas the Chinese economy, they're looking for demand-led inflation, where the demand in the economy isn't there, and that's unhealthy for their economy.
James, we've run out of time. More questions to ask, but not enough time. That was James Turp. He's from Sanlam Investments. Thank you so much, sir, for your time.
Thank you.
Sun International reported their half-year results, with online betting platform Sunbet singled out as a star achiever. Revenue in that segment jumped by over 71% in the period. We're going to be speaking to Anthony Leeming, the CEO of Sun International, on that after a short break.